Hey crypto friends, my name is Garrett and welcome to Altcoin Radar. Today guys, I'm going to be showing you 3 trading indicators that are literally the best for beginner traders to learn and use when they're just starting out. So guys, without wasting any time, we're just going to dive right in and we're just going to get started right away. So guys, to actually get this started, let me first say that trading indicators were very first developed by experienced traders. And guys, everything from candlesticks to volume indicators are literally just a few examples of technical analysis tools that traders can use to support their technical analysis and make their overall trading decisions, all right? In addition, you guys, indicators are definitely most useful for buying, selling, and verifying trends, okay? And also, leading and lagging indicators are, typically the 2 types of indicators that most people are using. Basically, you guys, a leading indicator pretty much anticipates the occurrence of, a reversal or a new trend. And while this seems interesting, keep in mind that not all leading signals are reliable, to be honest with you. Now, guys, as far as lagging indicators, on the other hand, this type of indicator typically follows the price, which typically means that it announces a trend change or reversal after it has already happened. A good example of this, you guys, would be of a lagging indicator would simply be like moving averages, for example, which are actually one of the most widely used lagging indicators that exist today. So guys, now that we've got some of the basics down, let's take a look at, what I feel are the actual top 3 technical indicators that trading experts use the most frequently, okay? So guys, the very first indicator that we're going to talk about here is going to be the Relative Strength Index, or RSI, okay? Now, a lot of you probably already know this, but you guys, RSI is basically a momentum indicator with its own scale, okay, you guys? And, the rate of change in price is known as momentum. So guys, with the RSI, a single line scaled from 0 to 100 pretty much signifies overbought and oversold market conditions. And guys, basically, RSI values that are greater than 70 typically suggest an overbought market. And guys, readings of 30 or less typically signify, it typically indicate an oversold market. So basically here, you guys, the RSI assists traders and both they assist traders in determining, when the price of a crypto asset is too far from its true value, pretty much, which, overall, you guys, allows them to profit before the market is able to correct itself. So as you guys can see here real quick, let me just talk about this here real quick. Here's the 70 line on the RSI, and then this would be the 30 line. And then you've got, your main line that's going through it, your main trend line that's going through here. So there's a lot that you can tell just from seeing this, okay? And when it gets to 70, market conditions are typically overbought. When it gets down to 30, market conditions are typically oversold and usually primed for a, trend reversal overall. But it overall depends on what the overall trend of the overall market is, you guys. And it depends on what time frame you're trading on as well. So these things really do play a large role in what you're, how you're trading and how you're using the RSI in general. Overall, though, you guys, the Relative Strength Index, or RSI, is typically used by traders to discover ideal trading entry points, and it's also known to be a very helpful tool for, trading the volatile cryptocurrency markets as well. And lastly, you guys, the whole point of the RSI is to identify market tops and bottoms and enter a market while the trend is changing. So guys, that pretty much does it for the very first indicator that I wanted to show you here, you guys. It's the #1 most used indicator by beginners, especially beginners, in any kind of trading environment. So guys, now we'll move on to the next indicator. So the next indicator that I've got for you guys is going to be the Bollinger Bands, which I've got set up on here as well. So Bollinger Bands are basically made up of 2 lines that are plotted at 2 standard deviations on either side of the central moving average line, which you see here. This is the central moving average line, and then we've got the 2 other lines up here, and down here, okay? So along with a simple moving average, which is what we just talked about. So basically, you guys, the band is composed of, its outer lines, and its use case is, it's pretty simple, honestly. When the market is slow and has low volume, typically when that happens, you guys, the band is typically narrow. okay? I mean, it's narrow, all right? Sorry, no, I should do it this way. It's not like this, it's like that, okay? So the band is usually narrow when there's typically not a lot of volume, okay? Now, guys, when the volume is good and the market is literally flourishing, the bands typically widen up and get very wide, okay? And we can see a good example of this right here, okay? Typically, there's not very much volume here. Nothing's really happening. But clearly, when the market started dropping hard, the band started to widen up hardcore. Okay, we can see the same thing happening when we get into when we get into bullish trends as well. We can clearly see here. Before it opened up a lot, it was very, very thin. So you can use this. You can use these guidelines to literally gauge what could potentially be happening next. So, and again, you guys, it all depends on what the overall market, what the overall market is currently doing as well. So keep that in mind also when you're looking into this. Now, guys, as far as Bollinger Bands, they're very useful for trading in both range and trending markets, okay? But you guys, you have to be on the lookout for what's called Bollinger Bounce, okay? In a range market, typically, which is typically, you guys, where, the price frequently swings, back and forth between two sides of the band, but pretty much always circling back to the main moving average. But overall here, you guys, with time, the price does always inevitably return to the average. It usually always does happen, you guys. In essence, though, honestly, you guys, the Bollinger Bands typically inform us of, whether the market is moving fast or slow. And as I mentioned earlier, the bands shrink when the market is moving slow and enlarge when the market is moving fast. So it's a very simple and easy indicator to use. Overall here, though, you guys, the bands serve as dynamic levels of support and resistance in most situations here. Simply, you guys, simply place a sell order with a stop loss just above the band if the price touches the top of the band, simply to hedge against a potential breakout here. And you guys, in order for you to profit, the price should move back down toward the average and possibly down, to the bottom band as well. So guys, now that we've talked about the RSI and Bollinger Bands here, the last indicator that we're going to talk about that I'm going to touch base on here is going to be, and it's my personal favorite, is going to be the MACD, or the Moving Average Convergence Divergence Indicator, okay, which is what you see at the bottom here, okay. This is one of my all-time favorite indicators. I love this one, you guys. This one is just absolutely phenomenal. So guys, basically the MACD is a pretty popular indicator, okay, especially for cryptocurrency trading, okay. So, whether you're trading cryptocurrency or, Forex or, pretty much anything else, stocks, whatever, cryptocurrency, most people are going to be using MACD when trading cryptocurrency, okay. I even use it on a regular basis myself, and this is because it's literally extremely easy to use, it's extremely simple to use, and it can generate reliable crypto trading signals in a very healthy market as well. But realistically here, though, you guys, the MACD is a tool for identifying moving averages that are signaling a new trend. Typically, whether it's a bullish or bearish trend. And guys, finding a trend is very crucial in trading, as we, typically all know, since after all, you guys, that's where most of the profits are made, right? Overall here, though, you guys, the MACD is a trend following indicator that evaluates if the short-term price momentum is, keeping up with the long-term price momentum. And if not, you guys, it's used to predict whether a trend is, whether a trend change is, imminent or not. So guys, realistically here, now that you know a little bit more about these, some of the most important indicators here, you can probably begin to see just how useful these indicators can actually be. I mean, they can literally boost your confidence in trading, simply by, helping you determine, when to enter a trade, the overall market's direction, and they can provide you with the confidence you need to enter and exit trades at the proper times as well. All three of these indicators can do just that, okay? And realistically here, you guys, keep in mind that, using just one indicator alone probably won't yield you the best results. So if you're just trying to use Bollinger Bands and that's it, probably not going to do very well. Or just use the RSI, probably not going to do very well. Same with MACD. With MACD, you might be able to get away with a little bit, but I wouldn't use it by itself on its own. But guys, you probably won't yield the best results if you're just trying to use one of these by itself, okay? which is why most traders honestly couple their favorite indicator, which is usually one of these three, with another one as well. And as many of you already know, I personally use a combination of both RSI and MACD on a regular basis. And I've been trading, like this. I've been trading like this by using just RSI and MACD for literally the last 5 years, very, very comfortably, you guys. But overall here, you guys, that's going to pretty much do it for this video. So I will go ahead and wrap this one up. But again, guys, hey, before you guys leave, go ahead and make sure to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in the comment section of all of my future videos.